Welcome to our hello. I think let me just do some quick sound check. Something is wrong. Hello, everyone. As I already mentioned, so welcome. It's a basics webinar, so it's mainly for new clients, new traders, or even for people that they have never traded in the past and they would like to to understand how this industry works and to get a bit familiar with the basics at least. So, as usual, I would like a quick confirmation in regards to the audio, whether you can hear me loud and clear, also whether you can see my screen as well. I will, in the meantime, I will upload as soon as possible. Actually, try to do it right now. The PDF version of this webinar for you to have the slides and just it might help you in the near future. Give me a second to do that as well. But I would really appreciate feedback in regards to the audio and the screen as well. Let me just question box loud and clear. Presentation booklet as well. Thank you very much, Zora and Nicole, for giving me a feedback. Just a second to upload the PDF. Come on. Perfect. So it's on. So you can, in the handout section, you can find as usual, the PDF version of this webinar. As usual, don't hesitate to contact us for anything you need. It might not be for the webinar, it might be in general for your trading, might be particular for your strategy, anything, fundamentals, whatever. Anything that is related with trading, investing, and anything that we can help you with, don't hesitate to contact us. Obviously, I'm not responsible for any withdrawals and etc. This is up to support, so that's a different field. I'm just referring on fundamental and technicals. So I will go through as usual the risk warning, and we can start as soon as I am done with this one. This material provides a general market communication for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. And users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the user is solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as Forex and derivatives may not be suitable for investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find all our full risk you can find all our legal documentation and the full risk disclosure in our website. So, Nicole, Zoran, I'm very curious that you chose to attend to the basics. You're definitely not in the basics category, but nonetheless, good to have you here as usual. Email address: webinars@hfm.com. Supporting me, Stuart, and our new team member, Marco, can reply to those questions and any questions that you have via email. Okay, so what we're gonna see, this is a 2 sessions webinar. So this is part 1. Next week we're gonna have part 2. You're absolutely right, Zoran. You might learn new things. I'm not sure whether this will be today or in the part 2, but as I said, you're the fact that you are here is the most significant thing, because you want to learn. You're trying to prove yourself by being here, even though you are not a newbie, and that's the best possible mentality that each one of us should have, not only in the trading business, but in general in life. Constant learning, constant practicing makes perfect, right? So we're gonna have a quick first of all, we're gonna clarify for newbies what we mean by supply and demand, because this is after what moves the market and the prices in general. How human emotions and news can affect and impact significantly the prices of the assets. What is fundamental and technical analysis, and why they have their differences. The different cycles in nature and in markets. And in the second part, we're gonna go through the more in practice, let's say, stuff such as price charts, how to read them, price trends, sideways moves, how you can track them, along with some indicators as well. Obviously, any questions that you have, I'm here to help, so stick it in the question box. And yeah, as I previously said to Zoran, who very, very, very nicely replied to me that I can always learn new things. That's why I'm here. That's the proper mentality. Well done, Zoran, and this will be proven very, very good for you and your success. I'm really sure. So yeah, and this is the reason why I put also Benjamin Franklin over here. It's something that we should have as a motto in our lives, not only as traders, guys. In general, everything we do, we need to be prepared for anything in life, right? Like what, like the words of one of the founding fathers of the United States said. Um, by failing to prepare about anything, basically, you are preparing to fail. Without a plan, you're nothing. I mean, you will fail eventually. Maybe in the beginning you are lucky enough, but luck is not always the tool, right? He was, amongst the other things, a great scientist, a great inventor, a businessman, a politician. So that's the most famous quote from him, and I'm sure you have seen this quote in the past many, many times. And that's why we are all here, and that's an example is Zoran's response. Nicole, I want to test whether I truly understand the basics at the deeper level without thought. Nice. Never thought about that. So I should have done this a bit more in depth, like a more challenging. I will have it in mind next time. So okay. Um, so I'm really glad that you are here, all of you guys, all of you. That's a proof that by being here, you're willing to learn and prepare and challenge yourself. So preparation is by far the most important thing a trader can do. So just stats, just statistically speaking, I will mention something that I keep saying in my webinars very, very often. Stats have proved that that institutional, I mean, is one of the very successful institutional fund manager, and I'm referring to Warren Buffett, of course. He said that he spends 99% of its time preparing to trade and just 1% of his time, sorry, in actual trading. 99% of his time preparing to trade and just 1% of his time in actual trading. And he's Warren Buffett. Billionaire. Is it even a trillion? Trillion, I'm not sure about that. So imagine. For those that don't know him, you should Google him as soon as possible. Now, okay, let's start. First of all, I would like to make sure that we are all here and we understand what supply and demand is, not only in the financial markets, but in general, okay? Sorry, just a second to reply to someone that sent a private question. Sorry, as I was saying, so supply and demand. Let's make sure that you understand what we mean by these two terms and how supply and demand determine market price. Okay, so supply and demand is pretty straightforward, like in your local grocery store or whatever. If there is if a particular thing, okay, has a lot of demand, so people keep buying and buying and buying that particular asset, okay, but there is like the supply is not significantly high. I mean, it might be a monopoly. I mean, just a single factory producing that particular asset. So there is a lot of demand, but just one source of supply. So you understand that this affects the price that that particular asset will be. Okay, the same exact thing happens in the financial markets. So the financial markets, the financial instruments, both in street and in financial markets, affected by the supply and demand. Just like in streets, there are people in financial market who want to sell, right? And people who want to buy. So the price is been affected by the quantity of people that they are selling and how much they are willing to buy. Okay, so the quantity demanded and the quantity supplied. These are two of the main forces for markets. Actually, it's the sole market forces of the sole force of the two only sources that markets have. Supply and demand are two words that economists use very, very often. If you're watching Bloomberg TV or if you're keeping up to date yourself with the news, what's going on with the markets or particular instruments that you might be interested, I'm sure you are hearing these words every day, every single day. They are the forces that make market economies work: supply, demand, and market equilibrium. I'm gonna come to that later on. So the law of supply and demand. Supply, as I said, presents the sellers, let's say, the people selling a particular asset. So I have an example over here written down with watermelons, a very old example. I kept the watermelons forever in my slides, but nevertheless. So I'm saying over here that if there are only a couple of watermelon sellers, like the example that I gave you with the factory earlier, so if there are only a couple of watermelon sellers, price is likely to be higher than usual. This will attract other sellers. It's like everything in life, guys. If you're local, I don't know, if a shop open in your area selling juice, okay, fresh juice, but there was no competition around, then you will see that sooner or later more and more and more stores will open just to compete that very first shop of juice, because they saw the demand, they saw that, that they saw the opportunity. They say, that guy succeeded opening juice bar, and there is no one else in the area, and they are queuing outside for getting a juice, so I will do the same. I will open opposite of him. I mean, you can see this happening every day. So it's as simple as that. There are few sellers. There is a lot of demand because the supply is small. Okay, that makes this asset a bit unique, let's say, rare, whatever you want to call it. So that leads to higher prices because those sellers want to gain more and more and more. So they are increasing prices because they see that there's a lot of demand. But if slowly, this attracts other sellers, attracts more and more people to start selling the same product, that will eventually bring the prices lower because there is competition. More and more sellers have arrived, so it's not unique anymore, and that could lead to price go lower, right? So demand, conversely, exactly the same thing. So if there is only one buyer for the watermelons that many sellers are selling, okay, so less demand than supply, prices are likely to fall. And again, if more buyers emerge, um, uh, so eventually you end up having a lot of people that they are willing to buy that asset, okay, oversizing the number of sellers, that could boost again prices higher. So like in life, okay, try to simplify things. So just a quick summary. If I have to just in a single word say what moves the market, is supply and demand, is buyers and sellers, is the actions of buyers and sellers for that particular asset, that particular good. Okay, so the degree to which the changes in supply and demand and the comparison between the two uh, uh, changes, it can be translated into the price. Okay, so thank you for your nice words, Nangbo. How can I pronounce this name? I'm very curious. Or is it Chris Lane? Okay, that's a visual example of supply. If there are only a few sellers, like this is a gold example, a weekly one, very old one, but I kept it because it shows the supply increase. So there are only few sellers in gold contracts, for example. So few sellers, so supply is weak. We don't have a significant supply, not at least that in a level that we will meet or exit the exit the demand. So if we have a weak supply, few sellers, you can see that the that end up with gold in this case skyrocketing to 192 in this example, in 190, 19 to 22 territory in that particular example. Okay, the level, the 1922 levels is levels that we are seeing. Actually, even higher. We are gold is flirting with the 2000 areas this year, but this is another example, as I mentioned. So at some stage, like the example over here, you can see that the price started moving lower. So the supply, the demand started to fade a bit. So at some stage, if they're higher, if the prices are getting way too high, okay, with people dropping out and unable to buy the contract at this high price and etc., we'll see that slowly that will attract it will attract more sellers. Okay, so people wanted to sell at this high level. Okay, so that makes that could end up with the price falling, and this is what happened back in this example in 2013. Okay, so conversely, if there are only some buyers for gold and the demand is getting weaker and weaker with a really high supply, the price is likely to come down. Lower, why we mention in our analysis, and I'm sure that you have heard this from other economists and etc. in the past. You are hearing the words oversupply, over demand, right? What that means, there are extreme levels oversupply. Sorry, oversupply or over demand, or you might hear that an asset has been overbought or oversold. So is the level at which the demand is so high, I mean extremely high, an extreme level that there is no further force to the upside. There is no further there is no further momentum to move even higher. So these are levels that usually attract people to jump in a different direction. So, for example, over here, as we said, the gold contract started attracting more and more sellers, so that end up with the gold moving lower. So at some point, the really low prices. So remember, we had been at 1922, 1922, but few years afterwards, the gold was nearly halfway that area, down to 1000 levels, historically low levels for gold, historically low levels. So low prices attract buyers because it looks like a bottom. So people are jumping into lower prices on the anticipation that it cannot go lower than that. So that could be a good investment because eventually it will move higher in the future. So that's why I've said over here that lower prices attract buyers. The same stands for the vice versa scenario. I mean, really, really high prices attract sellers, even because they want um, sell at a high price in order to gain more, even if, or if they are afraid that they will not keep moving higher, and so they prefer to sell now instead of later. So low price attract buyers. So as they emerge, the price of gold stops moving lower, as you can see in this circle, and is very likely to move up um, as more and more buyers could enter. Now, let's touch a bit the emotions and the news effect. So I cannot see any questions, so I guess we are good to go. Now, so it is often claimed that that the market participants in financial markets are so rational in their thinking and actions that human emotions do not play a part in the market moves. So the experience of the market, let's say, who are the market? Okay, give me a second to just finish the um, okay, actually I'm gonna reply right now, Amanze. So Amanze is asking who are the market makers? Okay, so market makers are either individuals or even member firms of an exchange that they buy and sell um, assets or securities for their own account. Okay, so the market makers refers to this term, any individual or member of a firm who actively quotes two-sided markets in a particular asset. Okay. Uh, hmm, Actually, this okay. Let me simplify that because we have newbies as well. Um, so, market maker is considered to be any individual, as I said, or member of a firm that member of firm of an exchange. Okay, not just that could buy and like buys and sells security of its own account. First of all, Ali, the presentation is in the handout section, so feel free to download it. So, so, okay, so the market makers, as I said, uh, let's firstly explain what is a bid and an ask price. Oh my God, Manze, that's not the right the question for this webinar. We have newbies here. Okay, so okay, let's explain a bit the bid and ask price first. So, as you might seen in if you have downloaded MT4 or MT5 and etc., the price of an asset uh, um, it's been quoted into bid and ask price. So bid, the term bid, refers to an offer made by an individual or corporation to purchase an asset. So um, it's basically the price at which an offer has been made for buying a particular asset. Okay. So when a buyer makes a bid, they stipulate how much they are willing to pay for the asset. Along with how much they are willing to purchase it. Okay, this is the bid. The ask price now is the price a seller is willing to accept for a security, for an asset, also known as offer price. So I might be able, like Andrea, I might be okay with selling something or buying something for $1, but the person that is willing to sell it may not accept this offer. So the ask is the price a seller is willing to accept for an asset. Okay, so this is what bid and ask price is. Now, the market makers are the ones that represents, let's say, the bid and ask price. So a bid refers to the price at which the market maker is willing to buy an asset. But unlike retail traders, so small market participants like you guys, the traders, market makers must also display an ask price. So a market maker represents or is the market participant that he must actively quote both bid and ask price of an asset along with the market size of each. So they are the ones that they provide liquidity and depth to the markets and profit from this difference. So they profit from the difference in the bid and ask spread. I don't know whether you are keep following or whether I confuse everyone, because this is not something that we are seeing in a very, very basic level. But on the diagram on page 7 of ebook of this webinar, yes, you ask way too early. Nevertheless, okay. Brokerage houses, guys, one of the most common types of market makers. Okay, they provide like HFM, the most common type of market makers. They provide, we as HFM, we provide purchase and sale solution for our clients. Okay, and there are many other institutional company traders that they are considered market participants, but one of the most common one and the most famous one are brokerage houses. That provide trading services for investors and traders in an effort to keep financial market liquidity. So yeah. So let's see at the later stage. Let's see more in a bit. Okay. Now we said about supply and demand, and we were started discussing a bit about human emotions and news. We all know that from experience that whenever money is involved, there is no there is there should be no there should be a lack of human emotions, but that's not the case, right? And that's why I put this we have this great comment on, because it shows exactly this action. It shows that if money are involved, human emotions, unfortunately, they are involved, and that leads very, very often into a wrong judgment. Okay, so here that's why I put this this great comic on, so you can see that the very first guy said up something about an Excel. I mean the spreadsheet, literally Excel, Microsoft Excel. Or that, no, sorry, I've got the stock here that could really excel. That it means that they will really, I mean, it's excellent. That's very good. But the person next to it is said really excel, and the Excel turn into sell. So the it's like a broken telephone, right? So and a mania, a real mania followed after that misunderstanding. From Excel to sell, 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 and suddenly um, a sell mania what happened eventually, which then is misinterpreted later on by a guy over here saying that this is madness, I cannot take it anymore. Goodbye, that I'm leaving all this mania. The goodbye turned up into buy eventually. So this is okay. This is over. It might be a bit. This COVID might over exasperated, but it's true. It's true. It's a very very good example of how human emotions, greediness sometimes, or getting blind by rumors or what other things without actually judge whether these news are actually true or not. Okay, so this is how madness could affect, how the greediness, um, the lack of judgment, the lack um, of critical thinking sometimes ends up to some very, very unreasonable actions. So let's move on. So I put an example again with the same gold chart again, just to explain a bit what happened back then, because a very nice example of how the investor sentiment, the human emotions, the speculation around gold affected the prices of the gold contract. So thinking, if you ignore what happened after this peak, if you ignore what happened afterwards, if you were up, if you were here, let's say, would you have sold your position at that top where this circle is? I mean, without let's I will hide this bit. Sorry. Come on. If you were here, right here, would you have start selling your position at this top, or you will remain in on the speculation that it will continue moving higher? What do you think? What do you think, guys? Anyone? Probably sell. I'll move the stop loss higher. Your screen is over zoomed. Yes, it's in purpose because I don't want you to see what happened afterwards. I want you to emphasize on the top. That's why I asked whether you will, if you didn't knew. I mean, back then, if you were seeing this chart, would you have sold your position at the top? So some people are saying that yes, I probably will sell. Some others are saying that I will have moved my stop loss higher. That's very good mentality. Uh, Warning, the candle closed in the upper shadow on the last three move stop higher. Nice, nice, nice. It's because you are not newbies, and you're experienced one. That's the good mentality. So that nice, nice guys. Okay, that's it. I know that this is now very obvious, but um, back then most people who have at the time said that selling gold, I mean retail traders at least, I know that now for you might not be the case, but back then most people will have at that time said that selling gold is madness. It's in a bull run. It's on this way to the moon, or at least the to 5,000. This is what happened back then. Now we'll zoom out. This is actually news that have been seen and headlines that have been seen back in 2011. Headline saying that, oh, gold would reach 5,000. So this is what was going on back then, and with people refusing that to realize that it was an overextended, an over bought gold contract. Okay, so um, So there were some Bloomberg headlines that China in 2011 demand for gold to exceed consumption in India, and so on, and so on and so forth. So news was and is always good when prices are higher. But that's why you need to be a bit careful. But eventually, the fundamentals came and affected, the news came and affected the price of the gold. Not only the fact that it was overbought, that the sentiment started changing, saying that there is no room to the upside. This is already way too high. This is a really expensive contract, and etc. Also, the need of locking some profits, and etc. But also, it was the news. It was the fundamentals. Headlines like from JP Morgan saying that a global recovery is bad for gold. So slowly, the news and these headlines started adding pressure on gold. Okay, so that's where the sentiment change, and sentiment, which represents the speculation of the market participants, is always bad when the prices are at levels where they have real potential to turn higher again. So at the top, let me get back. News is always good when prices are higher, but sentiment is always bad at levels where they have real potential to turn higher again. So this buying over here on this bottom is the sentiment pushing the price higher, sorry. So human emotions and news can be very misleading sometimes. That's where the technical analysis helps to step away from them and provides the tool needed for rational decision making. Okay, so if you're facing an asset and you cannot really explain why, let's say, it moves high, why it moves low, even though the fundamentals, I mean the fundamentals behind it, the supply and demand cannot explain um, this movement, or if the news are very, very good, but the price is dropping, and if there is not a reasonable a reasonable explanation for price moving higher, moving lower, it's always good to apply your technical analysis in order to provide you further clues, and in order to help you take a more rational decision making, rather than just blindly invest or trade in an asset just for the sake of saying, oh, it's moving higher and higher, I should jump in, and etc. No, this is where technical analysis can help you take a more rational decision. Okay, because indeed this is something that you're seeing nearly every day in the markets. Okay, uh, let's say buying money over here, but a sharp decline afterwards. So why without fundamentals or be able to explain why it's dropping? Okay, so let um, uh, human emotion, greediness, fear, and etc. outside of trading. And the way to succeed that is to rely more on the fundamentals. So for dollar, let's say just an example, what actions the central banks is taking and how it could affect the dollar. How is the US economy doing? Well, not well, steady, etc. Okay, so and if you cover the fundamentals, so how wealthy the economy is of the particular country, and I'm referring to economy, I'm including everything: trade, relationship, imports, exports, inflation, um, manufacturing indices, which is something that we are seeing today. All the indices that they will represent whether an economy is wealthy or not. Okay, all these are um, giving the overall picture, or whether an asset, it could, and a currency in this case, in this example, it could continue increasing its price, or whether it's having a pressure, a selling pressure, that will end up with the currency dropping, the currency's price to drop. Okay, this is what I'm referring by saying fundamental analysis. Then the technical will help you take a decision eventually without being affected um, by emotions that they could confuse you, and they could lead you take um, the wrong decision in the end. So this is the fundamentals, referring to this um, to the analysis that seeks to establish the value of that investment considered, while the technical analysis, it looks the price, it just monitors and reviews the price behavior of the asset using some tools. Okay, using some tools, so some indicators. And the combination of the two, it could be used to help you decide whether you will enter a market and the way you're going to enter it, or whether you will remain on hold until you have a very clearer picture of that particular asset. And by saying asset and the value of the investment, I'm not referring only to currencies, commodities, and etc. Also stocks. I mean, the stock of a price, the stock price of an asset, the stock price of a company represents whether the company um, is performing well, um, is a indication of its financial report, whether it's a profitable company doing better and better quarter after quarter, growing up, expanding, and etc., or whether it's facing problems. There are problems, let's say. Okay, it's the same exact mentality. Zoran is saying that, but by the way, I haven't ignored you, dear Amanse, but because you're asking questions that I think they will confuse all the rest, because we're not reached that level right now. We're nearly there, basically. I, I'm on it. Okay, I have it in mind. So the latest question came from Zoran, was it? I never learned how to understand, interpret fundamentals. In its time, but always have in mind that for each um, announcement, let's say, like PMIs, for example, today, without just ignore the movement of, let's say, okay, let's do an example on that stage. For every news or fundamentals or um, economic data release, have in mind that if the economic data show that a particular economy, for example, grow, okay, that's always, it's a positive thing, right? It's a positive thing. So that will have, it will have a positive impact to the currency of that country as well. Sometimes I know that this might not the case. I mean, during the announcement of I don't know, maybe the maybe we have a good reading, a good economic data release, but that very moment of the release, the asset, um, the asset, uh, um, the asset price drop, and you're saying, okay, why that happened? Why, even though the data were good, the euro dropped, for example? Okay, this is because it's instantly. The overall positive fundamentals, positive economic data, they will keep the overall medium-term picture, so the daily, weekly, even monthly, uh, uh, the asset growing slowly. Okay, so that very moment, the moment of the announcement, maybe because people were expecting a lower reading or speculating that they will fail, or we're surprised and etc., we might see the asset turning lower, or it might be just totally different reason. Okay, we might see the asset dropping, but if the overall outlook for a particular economy, let's say, is keep posting good economic data, and it presents an economy that is growing and expanding, etc., that will be presented in the daily, weekly, or even monthly chart, that is constantly growing and growing with some corrections in the medium term, but is keep appreciated and appreciated. Okay, the data release and the reaction of the very first 15-30 minutes, 1 hour, it is not an immediate, it's not, it's more or less represents the sentiment rather than the release. I mean, especially if it's we're referring to 15 minutes or 30 minutes charts. What time is it? Oh, okay. So wait a minute. Where did we stop? What was the other question? Just a second, guys, just to see the questions and catch up a bit with the questions. So how you can start, Zoran? Because Zoran is saying that I never learned how to understand and interpret fundamentals. Slowly. Have always in the back of your mind that more and more. By the way, I will put the economic calendar on as well, because there is always an explanation below that could help you slowly understand each of these data. There is always an explanation. So, for example, PMIs today. Okay, let's focus on the PMIs, the services PMIs in UK. You see, over here there is an explanation of what it is, what it represents. So services PMI, S&P services PMI stands as an indicator of the economic situation in the UK services sector. So it's capturing, as it says here, it captures an overview of the conditions of sales and employment. Okay, so this number, if this number comes better than expected and higher than 50, Okay, this is considered as something that it could support the sterling, that it could be taken as positive for sterling. Can you see that? In general, for this particular index for PMIs, which represents the purchasing, it's a purchasing index, okay, for the UK service sector. If a reading is higher than 50, plus it shows a growth, so it's higher than the previous month, then that tends to be positive for sterling. Okay, so at the time of the news, if there was a higher reading than 50 and higher than the previous month, something that didn't happen today, but nonetheless, that's positive. That could boost pound higher against other currencies. But if the reading is low, is lower than 50, that shows contraction. Okay, that shows that the services were lower than last month. The economic situation in the UK services has deteriorated in comparison with last month. Okay, so that could have a negative impact on pound. So these little explanations help you, okay, to help you to understand what each indicator is and whether is positive or negative for a um, it's positive or negative for an asset. Okay, so always have in mind though that each asset is traded against another asset, right? So it's not only a matter of whether this PMI, for say, is it could impact positively sterling or not. Don't forget that here, for example, I have pound Oz, the pound against the Australian dollar. So I'm comparing two economies, the UK economy and Australian economy, okay? And we have two words. So it's not only a matter of having constantly positive, let's say, economic data out of UK. It's also a matter of comparing these two economies, okay? But anyway, as you can see, it boosted the time of the release. It boosted slightly sterling higher, but then, sorry, that wasn't the time of the release. If I'm, that's the release was at 11. It was before the release, yes. So on the anticipation of the European Open, we had seen a bit of the pound getting slightly stronger than Aussie, Australian dollar. But on the release was at 11 o'clock my time at least. There was a big swing lower before setting back here again. And why is set back where it opens? Because there is a lot of indecision. Why is that? Because the data, even though they show that they were above the 50 level, so 50, a reading below 50 shows contraction of the sector. Anything above B50 is showing growth. But in this case, even though the services were higher, were above 50, the reading was lower than expected, lower than last month, so showing that the service sector is still struggling to recover, okay? But the manufacturing sector on the flip side, it came out below 50 and actually worse than last month as well. So that added pressure on pound. Okay, hopefully all the things that I'm saying are helping. We'll okay, I'm getting back to the slides, okay? Just to reply to Amanze that is patiently waiting for way too long. So initially, okay, What time? We already passed the hour. So, and we are a bit behind. This is just 16 slides out of 40. I explained fundamentals. So I will skip a bit this bit. Okay, yes. I will, since, let me just double check. We had, just a second, guys. Okay, okay, you know what? We are nearly halfway. So since we are nearly halfway, um, I will not continue with the slides, okay? But I will turn on replying to your questions since we have a few over here in order to go straight to technical analysis next time and the circles of financial markets. Okay, so I will leave it here for today, and I will go back to the questions. So I didn't mention, and that was an excellent question from my dear friend Amanzi over here. Didn't mention who are the market participants. I mentioned institutional players. We mentioned market makers because Amanzi asked for it, but we didn't go through in detail who they are and how they could affect the financial markets and etc. So that's a great question from Amanse, even though it's something that we have in other webinars as well. So market participants, other than you guys as retail traders, first of all, market participants, as you might already understand, and as we already mentioned, are anyone that buys and sells asset in a structured market. Okay. How can I get copy of guys in the handout section? You can download can you see the handout section? Can you all see the handout section? In the handout section in this webinar, in the webinar that we are on, there is a handout section. There's a section called handout, and you over there you can download the slides. Now I'm getting back to Amanda's question. Amanda, he asked half an hour ago, I'm afraid, whether the governments are participant of financial markets, how the central banks trade, whether the central banks are trading in the financial markets, and etc. So just to clarify at this point, who are the major participants, the market participants, and how they can affect the markets? I will try very briefly. So all the institutes, the individuals that are buying or selling an asset in the forex market are considered to be market participants. But some significant players in the forex market, because this is what we are talking about, are the commercial banks, indeed the central banks, dear Amanzi, since you asked for it, brokers, market makers, several institutions, the governments as well, hedge fund managers, retail traders, which represents you guys, regulators as well, exchange traded funds. All these are some of the key significant players, market participants otherwise. Remember that forex market is one of the largest financial market globally. Okay, more than 7 trillions. I'm not sure about the latest number, but more than 7 trillions are invested in a daily no, sorry, 7 trillions in general in the forex market are invested, but I think I don't remember the daily number. It used to be 5 billion dollars are traded every day. I think that number is way higher right now. I don't remember, but yeah. So, you know, all the players that I mentioned are market participants, not only billionaires that they are doing this to gain more or whatever the reason, but also governments, as I said, central banks, commercial banks, brokers, hedge funds, and etc. So why they're doing that? Because because Amanda asked, does the central bank trade in the financial market? Yes, it does, and actually are very often known as liquidity provider. So they provide the different currencies to be exchanged by the commercial bank, right? So Fed, the Federal Reserve in the US, reserves the right to print the dollar currency, right? It's their own currency. And, and so they are the ones that they make it available for exchange as well. So we can trade dollar because Fed allowed it. ECB, European Union has the euro as its currency. ECB reserves the right to print euro, right? And reserves the right to make them available for exchange as well. So the central banks supply the commercial banks with the currency, right? In order to be exchanged in the forex market. So yes, they are market participants as well. And that's why they are so remarkably kind of influence the forex market intensively through their policies, actions, comments, and etc. That's why the traders, forex traders, individuals or not, are always very anxious about expectations of new monetary policies from the leading central banks, because this will affect the price of the currency. But as I explained, it's not only the central banks, also commercial banks are market participants and one of the most significant players in the market, because they contribute a large amount of capital traded in the forex market. So over 80% of the money traded in the forex market comes directly from the large commercial banks. So they're doing that because they have been entrusted. They have funds that they have been entrusted to them, and in order to generate returns in interest for their clients, they are investing in the forex market. Some leading commercial banks is obviously JP Morgan, UBS, Barclays, Deutsche, Goldman Sachs, HSBC, and etc. Morgan Stanley, Citi, etc. As I explained, governments. You asked me about governments as well. Kindly explain, how is the government a financial market participant? Just like any individual and commercial bank who is seeking profit by trading the forex market, so does the government. Many governments invest a large number of their funds into the forex market to hedge against inflation in order to boost their local economy. Is that clear? Okay, it's not, they don't represent a big amount of the money traded in the forex market. There's just a 5%, but still, yes, they are doing that in order to profit, to hedge mainly against inflation, and the profits will be used for boosting their local economy. Where does broker get the money they pay to profit traders? Okay, let's talk a bit about brokers as well. Brokers are the bridge between individuals and forex markets. Okay, they are the bridge. So for us, for you guys, being able to be market participants, to have on your PCs, on your mobiles, the ability to enter the market like the big institutional players are doing, to enter the market and trade and buy or sell an asset. This privilege, let's say, it was given to you because brokers um, uh, they are seen as the financial service providers that give the give an easy access, let's say, for individuals to participate in the forex market. So brokers are indispensable to the markets and retail forex traders, and to the retail traders, because they provide the leverage that boosts the tiny amounts deposited by traders. So the fact that so the brokers are also best described as order executions, right? So you are putting the order, the broker executes it for you directly in the markets and generates a result that might be a profit, that might be a loss. If you were, I mean, if you had, if you the decision was right, you may end up with profits. If not, you might end up with a loss. And what was the question? Sorry, I ran out of what does broker get to the money they pay to profit traders from the actual market? The brokers act as execution, okay? Uh, so brokers has actually access to the forex market, and the traders are using them as the way to be able to trade the forex markets as well. And if your question is how the brokers are gaining money, it's not from your own money, guys. It's from their admin fees, swaps, and etc. Okay. Since they give a direct access to the market in an insurance way, there are some admin fees. There are many kind of fees as well. Guys, you keep asking about ebook on currency correlation. Currency correlation. So you are referring to an old webinar, Amanze. You're referring to an old webinar. If it's an old webinar, I cannot really check right now. Can you send me an email instead, please? Webinars@hfm.com. So guys, let's keep it. Let's call it a date for today, okay? It was very briefly for newbies mainly. I see that you had many questions, but the questions are presenting a more advanced level of traders, and I don't want to confuse the rest, so I will leave it as it is for now. And we're gonna see the part 2 next time. Okay, we're going to continue with the rest. We're going more in depth about the technical analysis, the technical indicators, the circles in that the market circles and etc. Okay, because I see many questions that are not correlated, let's say, with this particular topic that we covered today. Like people ask about gold and etc. Come and join us tomorrow on the live analysis. Okay, over there we're more flexible to see, to check the trends together and how the economic data affected the market, etc. We have inflation as well tomorrow from UK as well. So, but because I don't want to leave any question unanswered, I will. There is a question from Brian. Was it about gold? So I will finish with that, even though it's not about market basis. That's a live analysis, but I don't want to leave anyone unsatisfied. So Brian was asking about will gold drop today when home sales are announced? So okay. Okay, the gold, okay, anyway, if you see this daily chart, it's been, it sustains, okay, it's been sustained at a level that, at the low level of the lowest area that we have seen since March, okay, it's at 1960, below the 50-day moving average, below April's lows, and is back to March low territory. If the datas are already out. Where's my calendar again? The data will be out in an hour and a half. We have PMIs and we have home sales as well. So it's not only about home sales, I'm afraid, Brian, but it will also, the focus will also be on the PMIs, okay? Because they are at the neutral level right now at 50.2, 53.4 for composite, 53.6 for services. So if we see trending back to contraction or increasing higher and etc., that could help dollar. So if indeed we have dollar positive news from the data today, not only home sales but also PMIs, that could help the dollar. So that's inversely correlated with gold. So it could push gold lower. For the time being, the gold is steady. So since the open this morning, the European Open, it's like sideways. You see, unable to extend lower below 1950 or even to extend higher. So positive news could negatively impact gold and positively impact dollar. But if there is a surprise, a disappointing surprise, that could have the vice versa impact. So, okay, guys, I'm gonna call it a date. Oh, I've written them but never gave them the ebook. Please help. I've written to them but never gave me the ebook. Please help. I don't get it. I have written to them but never give me the ebook. Who? Who, Amance? Amance, if dollar president and speaker agree on dollar debt ceiling, will the euro dollar buy or sell? I cannot advise, okay? I cannot advise, but as has been seen since last week, any comments, any positive outcome, or even a confirmation that eventually they're going to have a deal, okay, that could negatively affect euro dollar. Remember, euro dollar is euro against US dollar. So since last week, the latest, I think, was Friday and Thursday. There were some news from president that they are nearly to a deal and etc. That help dollar. So yeah, that could you see that's dollar holding some gains over here. The okay in general in May, but also gain some ground um, uh, since Monday. Wait a minute. Can see more questions coming. What else? What else? Let me double check whether we have an agreement actually. No, there is no announcement of how about an agreement yet. I think. Let me just. So yeah, in general, since last week, the U.S. debt ceiling talks managed to bolster a bit the sentiment, and that was positive for dollar. Okay, so that was negative for euro dollar. Dear Amanze, my question, please. What was your question? Wait a minute. Let me scan a bit higher because there were. Again, the same thing stands for a limb. Um, um, what if US defaulted the payments? No, they will breach a deal. This is the same drama story again and again. There's always this risk, but eventually they cannot do otherwise, and they will agree in a deal. Okay, it's the same old drama again and again. Okay, so far, as I said, initial to be honest, that you can see from this candle this initial candle last week. There was a tiny candle, negative one. It was when there was this concern that there is no development in the talks between President Biden and the Congress members, and they are not reaching a deal, and etc. So that initially added a bit of a pressure on the dollar. But afterwards, as the comments start coming out and saying that, oh, we are nearly in a deal, oh, we're going to have a deal by next week, and etc. All these help the sentiment and help the dollar as well. So there might be already a pricing on the deal already that that kept the dollar higher. So there is it's unlike the US to default. It's the same story again and again. No, they will agree on a deal. They will have to. Cannot do otherwise anyway. And even last night, I mean, McCarthy came out again saying that there was a very productive talk on the debt ceiling, and that boosted the dollar higher. Okay, at 103.50. Boom, just earlier, 3 hours ago. Okay, so that's a positive news. If for any reason something came up and say that, oh, we haven't agreed, which is unlikely because we keep having confidence increasing that the U.S. Debt ceiling deal will improve further. So the case remains as it is. Even though there is not a deal yet, since the optimism, there is an optimism, the sentiment is the market participant are optimistic in regards to the debt ceiling and the deal, that eventually a deal will happen and eventually an agreement can be found. This is something that keeps dollar higher, and gold lower for that particular reason, and euro dollar for the exact Same reason. Did I reply to your question, Lim and Amanze? Hopefully I did. Okay, I'm gonna call it a day. Have a great day ahead. Take care. As I said, it's services and manufacturing PMIs from US, and as Amanda said, is home sales as well. So take care. A very big day is also tomorrow. We have RBN's trade decision and conference. We have inflation from UK. That I remind you that. It's an economy that had been still in a double-digit inflation. We're expecting that it will show a decline, which that could be good news for the central banks, but let's wait and see. So tomorrow, RBNZ in focus, inflation from UK, and later on a lot of speeches from central bankers. Governor Bailey, Fed Wellers, Lagarde, and the FOMC minutes later on from US that will give us further indication about the next step from Fed. Okay, see you again tomorrow, guys, with the live analysis in all our social media, Facebook, YouTube, LinkedIn, Twitter, and here in GoToWebinar as well. So feel free to join us from any channel that you wish. Okay, thank you. Bye-bye.